Is your business turning over less than $10 million a year? You can write off some prepayments in this fiscal year. Hi, I'm Melanie Zander from MJA Business Solutions. Even if you're one of those small business owners who likes to leave all the tax stuff in the hands of your accountant, it pays to know about the small business tax concessions offered by the ATO. When you understand these tax breaks, you can use them to your business's full advantage. It can get confusing because the tax laws keep changing. To help you, we're producing this series of short videos that can help you stay on top of things. In this episode, I'm going to talk about immediate deductions for prepaid expenses. This tax break allows a small business to deduct in this fiscal year money they pay in advance for services to be delivered next fiscal year. That means you can get your tax deduction sooner, which could be a positive for your cash flow depending on your situation. So let's go through the questions you need answered to understand this rule properly. First question, what is a prepayment and how does the immediate deduction work? A prepaid expense is basically anything you pay for now but won't benefit from until sometime in the future. So let's say in January, you pay the rent on your business premises for the entire calendar year up front. On the 30th of June, when tax time arrives, you will have prepaid your rent for 6 months of next fiscal year. The ATO allows you to claim the rent for those future 6 months in this fiscal year instead of waiting to claim the next year when you actually use the space. An important question, can I prepay anything I want? No. There are a couple of different limitations for what prepayments qualify for the immediate deduction. First of all, you can only prepay up to 12 months ahead, so you can't prepay your rent for the next 3 years and write it off immediately. Make sure your prepayment ends no later than the last day of the next fiscal year. Secondly, there are some expenditures that are excluded from the prepayment rule. The most important of these is salaries and wages, so you cannot pay yourself or your staff in advance and deduct this as a prepayment. Final question, how can I take advantage of this rule? Depending on your current circumstances, it may make sense to negotiate with your suppliers to pay some of your expenses in advance. Not only will this bring forward your tax deduction, which could give you a tax saving this year, but you may also be in a position to negotiate a better price by paying in advance. Remember, though, that this will mean a large cash outlay, so you need to carefully consider the impact of your cash flow. If and how you can take advantage of the prepayment rule depends entirely on the specifics of your business. We recommend that you talk to your accountant well in advance of the 30th of June so that you're able to make tax-smart decisions about prepayments. For an overview of pre-tax planning strategies for small business, you can download our ebook, Keep More Money in Your Pocket. Go to our website, mjabusiness.com.au, to get your free copy. And thanks for listening.